It's time for me to get out my crystal ball and make a few predictions, a forecast, if you will, of what I see coming down the pike for the world of real estate in 2025. Hi, Emily Farber here, your favorite Iowa YouTubing realtor. I make videos all about real estate and Iowa, so if that sounds interesting to you, hit the subscribe button down below and give me a thumbs up. Now, you know, I would love to hop on here and tell you that everything is going to be great. Interest rates are going to drop back down into that 3% range, which will suddenly help everybody afford a house again. Except I can't. That would be a big, fat lie. And I don't actually think that that's what is going to happen. I'm sorry. What I do think is going to happen is going to be reminiscent of what we saw in 2024, rather like the movie Groundhog's Day, with some interesting insights about what it means for you. Now, I'm someone who did not find a lot of aspects of real estate in 2024 to be particularly enjoyable for myself as an agent or for my clients. And this is unfortunately not the real estate forecast that I want. 2024 was the worst year in home sales since 1995. Look, I don't get to control the market, so the best I can do is work with it, work through it, and keep my people, like you, educated so that you can make informed real estate decisions for yourself. Alrighty, first up, let's talk about the rates. Yay! Everybody's favorite topic. During the Fed's December meeting, Jerome Powell signaled that the Fed will be in no hurry to cut key rates, which was read by analysts as a very hawkish stance. At the Fed's last meeting, they lowered the benchmark rate by 1/4 of a point. And of the 19 policymakers on the committee who vote on this, several voted to leave the rate unchanged, which seems to signal some division in the Fed and uncertainty about the direction inflation is going to take once Trump takes office. The prospect of higher inflation makes it hard for the Fed to reduce borrowing costs because high interest rates are its principal weapon against inflation. Powell said, quote, "From here it's a new phase and we're going to be cautious about new cuts." One of the most common things real estate agents hear from buyers time and time again is that they want to wait for lower mortgage rates before they make any purchases. While what the Fed does doesn't directly tie to mortgage rates, it is correlated. What I'm telling you is that I don't expect to see much progress in rates in 2025 dropping lower than they were in 2024. While rates have fallen from the peaks that we saw in 2023, the average mortgage rate in 2024 was 6.72%. I expect rates to stay in the sixes in 2025, as do industry leaders like the Mortgage Bankers Association, Realtor.com, Fannie Mae, Wells Fargo, and Goldman Sachs. Historically speaking, big swings in interest rates are accompanied by economic catastrophes. In order to significantly lower mortgage rates, the U.S. would need to fall into a recession and inflation would need to plummet. If the unemployment rate rises or hiring slows considerably, then borrowing costs, including mortgage rates, could fall. But in the opposite scenario, if the economy is strong, inflation continues to persist, and national deficits increase, mortgage rates could actually head towards the eights. The real wild card in all of this is Trump's universal 20% tariff on all imports, with a possible 60% tariff on imports from China that he has proposed. If implemented, these tariffs would be inflationary because businesses would likely pass those costs on to consumers by raising their prices. Here's the kicker. Pay attention to this. Even if mortgage rates were to fall by 1% in 2025, it won't make home buying suddenly affordable again, especially for low to middle income households, because home prices have increased 40% since 2020. Look at this data from the National Association of Realtors. home prices have continued to do what they do, which is go up and up over the course of time. Which state are you in now, and what is your state's home price appreciation from pre-COVID times? Tell me down in the comments. All that appreciation has left homeowners sitting pretty. Look at the wealth discrepancy between homeowners and renters. Gee. Home ownership builds wealth, plain and simple. Period. Yeah, I know someone in my comments is going to tell me that they can get a better return in the stock market and they think renting is a better, smarter idea. But the fact of the matter is, most people who rent aren't investing in the stock market. Home ownership is one of the safest ways to guarantee that you've got some money working for you. Part of the reason home prices are so high is that the U.S. housing market is suffering from an inventory crisis of 1 to 4 million houses due to lagging new home construction. When home buying demand outpaces supply, prices go up. When we think about new construction in the upcoming Trump era, it is hard not to be concerned about the impact tariffs will have on home prices and what will happen if undocumented immigrants get deported. Undocumented workers are currently a vital part of the construction industry in the U.S. Estimates put them at 13.7 to 25% of the workforce in the construction industry. If they get deported, that is going to be a catastrophic labor shortage in the construction industry. Okay, so that's a nice segue into the next reason homes are not going to suddenly become affordable, and another Groundhog's Day remix that we're going to see more of in 2025. The inventory problem. We just talked about the issue with new construction and that component of the market, but what about all those regular pre-owned houses that most people buy? Inventory is something to keep your eyes on. The last 3 years of the post-pandemic housing market have been marked by very few sellers, and we're only just now starting to see data that the tide is turning. On a national level, we've been looking at 60,000 new listings a week versus 80,000 a week in years past, according to Housing Wire. Why are there so few pre-owned homes for sale? Because people simply cannot give up those uber low rates that they locked into during the pandemic era. Nearly 86% of homeowners have mortgages of rates less than 6%. So the only way they're up and moving and giving up their rate is if they absolutely have to, for reasons like they're moving locations because of a job change, they're getting divorced, somebody died and the estate is being sold, or they're experiencing such a profound debt problem that they can no longer afford to keep their house. Here are some interesting numbers from NAR that show some of those big life events that result in home purchases or home sales. These sort of things, well, they're the facts of life and death. If you spend any time on social media aimed towards houses, lifestyle, and the like, you're going to find this type of comment time and time again when people are talking about their homes. Girl, that 2.7% interest rate has us never moving again. Samesies here, our starter home is starting to look more like a forever home. I really do hope we can save up enough and move in 2 years or so, though otherwise we will just add on to this house, praying interest rates to drop again. Same, stuck forever. I think an unexpected consequence of people being essentially stuck in smaller starter homes coupled with home prices cutting people off at the knees is an interest and growing acceptance with the idea of cozy. Is America's love affair with bigger finally over? My take on all of this is that cozy isn't just a decorating style. It's a confluence of decorating, trying to find a feeling, and the reality that many people are coming to terms with. They will not be able to move, and or if they want to be able to afford a home, it's not going to be a big home. The McMansion may have finally met its demise. So should you buy a home in 2025? That's not a question for me to answer. I do not think home prices relative to income levels are ever going to return to what we had pre-2020. That ship has sailed. If it were me, I would not base my decision on mortgage rates and waiting for them to drop. That's a housing market issue that is out of your control. Spend your time and energy on things that you can control, like saving for a bigger down payment or boosting your credit score. Two things that will help you qualify for a lower rate. Consider smaller homes. Shop smart and look for deals. Maybe those new builds offer incentives to bring your mortgage rate down for a few years. Or an older home that needs some updating that you can handle with a slow multi-year plan. If you want to talk to me about buying or selling real estate in the greater Iowa City area, reach out. I love to talk to people who have found me on YouTube. Hey, it's been fun, and I'll catch you later.